Hello, this is My Time Television where we explore American cuisine. This segment will be broadcast on My Time Television and Miyun Television in collaboration with Miyun Television. Until recently, I introduced a list of companies that I personally wanted to see under the theme of Corner for Stock Exploration. When I first started this segment, my original goal was to cover about 30 companies, so I thought it would be nice if I could go through them quickly. But in reality, as I started to go into more detail, I ended up providing a total of 17 episodes for this segment. Since the market has recovered significantly, it's difficult to consider these stocks as undervalued blue chips now. I believe it's time to return to the segment's original format. Since 17 companies were introduced in this segment, I thought it would be helpful to summarize their current status for viewers who watched all 17 episodes. This summary will provide a comprehensive overview. The reason I started focusing on undervalued blue chips last year was because Jisoo said that if the S&P started to break through 5,500, it would rise very quickly from there. So when the index dropped, it fell by more than 15%, and by sector. Some industries fell by about 30%. The average was around 50%, and some of the hardest hit industries, the ones that were hit the most, dropped by as much as 70%. These situations all happened within just 3 months. So at that time, instead of panicking, I thought it was necessary to look for good stocks and good companies. So I started to look forward to this corner. Maybe when this crisis is over, this corner will be revived and start again. So first, since the market rebounded again, I organized and summarized the parts related to that. And from now on, I will continue this corner focusing on the original topics as before. I filmed my first video on March 19th, and at that time I started releasing videos about AMD and ARM holdings. At that time, the max score I provided was 38 points. The score was 38 points, and below 25 points is considered the public offering stage. Even in the first video, I mentioned that if it falls below 25 points, you need to be selective with your stock purchases. I said that if it enters the public offering stage, you should be cautious and try to reduce your buying. That's how I started this corner, by explaining these points. On April 15th, I discussed Hyundai Motor, TSMC, and Datadog, 3 stocks I had mentioned in the previous month's market review after reviewing their recent performance. This is the stage that corresponds to fear. At this time, if you look at the chart, you can see that the market is falling into extreme fear. So buy undervalued assets aggressively, that's what it means. So when you enter the market during times of fear, the best thing to buy is actually ETFs. Because when you look at the market as a whole, it's better to buy the index at that time. That's good. And when fear spreads, stock trading varies by sector. Some industries may rise despite the fear, while others plummet, and some remain average. So if you think you should buy at the bottom, it's best to buy ETFs during the fear phase. When buying individual stocks, refer to popular buy signals from the service to identify stocks many people consider the best. Using this as a reference can be helpful. Finally, I Cheol-Yong-jong filmed this on May 12th. When I provided it, I called it a trade desk or a notebook disk.
It was a company.
These companies also have high market shares, so they account for about 50% to 60%. So whether it's a company with that much market share or an actual company, I'll go over these things together. At times like this, you need to step away from the usual and look at the process. The process that seems quite reasonable is actually not, but rather when you get caught up in the stages of the process, you need to be very selective and careful with your investments. Right now, the market is in a state where it has fallen to the bottom stage. When you look at it based on the current standards, it's about 80 points. According to the data we checked, greed in the stock market has reached up to 100 points at its peak. And before the recent drop, the highest score that greed recorded in December 2024 was about 83 points, so it's still quite high. The score ranges from 80 to 100 points. During that time, there were significant inflows of money. During times like these, it's wiser to concentrate on steady or stagnant stocks rather than blindly pursuing rising ones. If those stocks begin to climb or gain momentum, you can capitalize on the early stages of those trends, which is a sound strategy. So the reason why I keep telling this story is I introduce these corners in the current market conditions because we need to be more selective and careful at this stage. The context of greed and fear no longer fits. Many of the stocks that had big drops have already rebounded, so now we're going back to a more general selection and development corner. I'll try to review the stocks I introduced before as well. I'm providing this video in the order I prepared it, and these are the comments about this video. So first I started with AMD, then moved on to ARM, Qualcomm, Celsius, Funstone, NVIDIA, and then NVIDIA was said to be the most important in the system. I mentioned that I entered the English market for the first time. Introducing the video. I'll play it for you. Next, I'll introduce the slides and explain the key messages as I go through them. And then next, among the growth stocks, there were companies that couldn't survive the competition in crowded technology and service industries, but in the case of companies like ServiceNow, even though they couldn't avoid the competition, if the price was reasonable, they were able to survive. I shared these kinds of cases with you. So, I went through a total of 17 categories, and among them, the most important category was the pharmaceutical and biotechnology sector after NVIDIA. After covering the pharmaceutical and biotechnology sector, I moved on to TSMC Datadog, and then to the Japanese stocks we usually talk about, and the so-called large cap stocks, and the so-called Magnificent Seven. That's how I started to go through these categories one by one. The younger generation is actively responding, and there are parts where the overall markets are receiving strong support, and then the growth stocks are rising and moving up. That's right. So companies like Google, Microsoft, and Meta have been making steady progress with these types of technologies in the series. So after that, companies like Amazon and Apple also tried to join in, but they couldn't quite catch up. And then, as the last part, I brought a list of video-related trade desk topics, and after that I even included topics up to the Navar disk, so in total I brought 17 topics. I'm going to briefly review these 17 topics again today, summarizing them for you. The first group is the semiconductor industry, which includes AMD, ARM, NVIDIA, and TSMC. There are a lot of stocks in the semiconductor sector like ASML and Lattice, as well as many equipment-related stocks. Then, in the next group, there are companies like Cadence Design Systems, Marvell Technology, and many others in the design and technology industries. Among them, in the semiconductor sector, growth potential is very high, and these are companies that can continue to lead the industry in the future. I divided these 4 companies into Group A for explanation, and next in Group B I'll talk about the large cap stocks. Microsoft, Google, Meta, and above them, Amazon and Apple are the tech giants. I'll introduce the categories and briefly explain the current situation. Group C is for companies related to the turnaround. These are companies whose fundamentals have improved significantly over time, and after a complete downturn, they're now showing solid performance. These are the so-called turnaround companies. So Celsius, then Doosan, Versora, and then now Novo Nordisk, Datadog. These are the types of companies that are now being grouped as turnarounds and are being reviewed. In the last group, we have growth stocks. These are the companies that many people are most interested in, Palantir, and then technology service companies like Now, Trade Desk, and so on. I'll quickly review these in the last group, which is the growth stocks, so you can get a brief overview. This is my open plan. To list the items. Through Google Spreadsheet, I organized everything into one sheet, and as you can see here, this is in order. I sorted them by video release date, and at that time, the videos that had already been released are marked, and then the next ones are the stocks of the upcoming episodes. The stocks for the upcoming episodes are for the episodes scheduled for May 20th. And up until then, the records of the entries are listed like this. So if you look now, compared to the 52-week high, the stock price ratio is as high as 98%. That means it's very close to the highest point. It keeps repeating like this, as you can see. If you look at the numbers here compared to when the KOSDAQ was broadcast as a tech rally, it had recovered about 75%. After that, service sectors recovered 40%, Tesla 28%, Palantir 27%, and Meta 27%. That's how things are now. Recently, the stocks I mentioned earlier, such as NVIDIA, plus 3%, say Snowflake, plus 6%, and Enphase, plus 8%, have been on the rise. There are currently no stocks with negative returns in this data. However, as time passes, some stocks may experience negative returns. When I invest, I often wonder why I'm holding certain stocks in my portfolio, and I think that making decisions based on those questions has a significant impact on my returns. So next time I'll explain again that these volatile markets can come around once or twice a year. So when those opportunities come, being able to use your courage at that time and make those decisions is very important when managing your portfolio. On the other hand, when I invested before, I was scared but still put in about 70% looking back. I question if that was wise. It's much better to spread out investments gradually. During periods when you receive adjustments, it's better to hold some cash rather than forcing yourself to make minus returns. If many people start to hold on to those expectations, it could actually be a good thing. Then, as I mentioned earlier, companies like AMD and ARM in Group A,
NVID, IA, TSMC.
I'll introduce them in this way, and I'll show you by moving to our service site. Can you see the screen? Shall I try AMD first in order? I'll just show you AMD's current market for now. If you look at the SMART score, it's good because it evaluates by considering three values. To assess an industry, consider three factors: the industry's overall quality, the company's valuation compared to its peers, and the timing of the investment. Are you asking about the current market situation? In stock picking and asset management services, we judge excellent companies using a SMART score. The volume action is being generated organically by the market itself, and we are conducting quantitative analysis based on developed quantitative algorithms. Based on that volume action, we judge whether the market is bullish or bearish, and for the parts related to the third timing, we are looking at the exponential moving average chart, and we are also checking the exponential moving average chart together. So these three indicators need to match as a final condition for a buy signal to come out. So many people personally refer to the buying and selling system, but in the short term there can be some changes in the price, but the buy signal does not come out easily. However, if the valuation is very low and I want to buy, then many people judge and buy, and the price rises. Buy and sell signals are there to help you make more objective decisions. Even though the signals come out conservatively, if people make decisions based on their emotions, it's better to make decisions more objectively and rationally based on data. So when many people are confused at first, it's good to refer to these numbers. If you set your interests or these things like this, you can set up your own watch list and receive alerts when a stock hits your criteria. So for those of you who are new, you can get alerts as notifications, so it would be good to refer to them. From that perspective, just follow these three things. AMD's SMART score rose from 68 to over 80 points in the past year, a significant improvement that's rare among companies. Just maintaining it is already a good company, so for a company to go over 80 points and keep it up is really impressive. In this way, companies that have risen this much in just 1 year are likely to continue to see their stock prices go up in the future. That's really good. Growth improved from 65th to 80th percentile with unique competitiveness and financials.
Safety and profitability as well.
Industries that have boosted their profitability from the 25th to the 40th percentile are remarkable and should be monitored. These industries, which had many undervalued stocks previously, are again being highlighted in this situation. Next, the current score is 90, so you might think it's very good. But the second one is valuation. If you look at the valuation, AMD was once considered expensive, but at that time it was actually undervalued. In these cases, the price is often suppressed, so it's actually better to buy when it's undervalued. That's the logic here. So even now, the stock price is rising, but it's still undervalued compared to its fundamentals. That's why I provide the exponential moving average chart.
If you look at this,
the stock price keeps going sideways, and while it was going sideways, at this point, the 5-day moving average crossed above the 21-day moving average, so that's when it started to turn upward. On April the 28th, a technical change occurred when it broke through the 21-day moving average for the first time. After breaking through, it began rising in a technical sense, and that's when this signal appeared. I primarily use the 5-day and 21-day moving averages on the exponential moving average chart. I don't use any other indicators. In reality, things like which line to use for each sector, these are analyzed by artificial intelligence to find the ones that fit best. If you look at various people's references, you'll see that when they analyze and upload midterm data, they often use the 21-day and 61-day moving averages. Even when looking at things midterm, they tend to prefer these lines because they are relatively reliable. So basically, the current buying trend is on the rise, and even in the artificial intelligence trading signals, a buying trend is being maintained. The stocks I mentioned before vary in price, but a buy signal has emerged. I showcased most of these stocks on video prior to the buy signal's appearance. There are many that have been delayed, and there are also quite a few undervalued ones. If there's a bit of positive momentum, we can introduce you to many high potential companies for a buy signal from small to large caps. So for this company, the buy signal for the 100-day moving average has already appeared, and currently it's in a state where it's receiving the 12 and 8-day moving averages as well. That's the current situation. Next, the second company is Nvidia. In the case of Nvidia, up until now, there hasn't been a total buy signal in both directions. So the first buy signal was too early, but recently, Nvidia has captured a perfect buy signal for the complete early stage. At that time, due to the market situation, I sold it quickly, but after selling, I bought it again. And then from the next day, I started buying it gradually. Around that time, the valuation started to rise to a high level. So I couldn't catch it in the system at that time, but if I had caught it, even though the valuation was very high, as long as the trend was alive, I would have continued to hold it. If you just hold it without thinking in the long run, you might end up with a loss that you can't recover from. But the biggest downside was that I couldn't catch it in the system. Shinho, who had purchased it twice before, reappeared after several years. So even though Nvidia is said to be undervalued, and that's being talked about in the video, its smart score is 93. It's a good company without a doubt. If you look at the second valuation part, Nvidia, which seemed to be highly valued originally, actually looks undervalued at this point.
$110, $96.
At this point, you can see that the stock price is in the light blue area, which means it's undervalued. This is the first time Nvidia has entered this price range. So if you look at this screen, you can see that Nvidia entered the undervalued zone for the first time. And that's why I captured this screen to show you. The industry remains strong after rebounding, maintaining its current level and valuation, indicating its favorable state and prospects. At the end, if you look at the exponential moving average chart, you can see that it was quite undervalued, and around the end of April, it started to recover from that point. In the midterm, if you look at the 60-day moving average from this point, the overall trend has improved. And recently, even though it's still undervalued, the adjustment is being absorbed in a positive way. Currently, Meisu Shinho is holding it with me, and as of November, my current dividend yield is around 14%. Currently, according to the signal, I am holding the stock. Next, I will take a look at the third company, TSMC. TSMC is also a very good company. As for the semiconductor sector,
If you look, it scores 95 points.
it gained a point from the previous month, surpassing Nvidia to become number one. Nvidia fell from first to second place with only a 1-point difference separating the two positions.
Because of that.
TSMC has taken first place in terms of upward momentum, although not significantly. Growth is very high, and this industry is also very stable and profitable, so it's understandable why people want to invest in it. You could say that this is the type of industry that can be bought with confidence. So if you look at Nvidia's stock price, right now it's rising due to expectations. But just because it's rising on expectations doesn't mean it's actually undervalued. The fair value serves as a baseline. And when the price deviates from it, it's considered overvalued or undervalued. Visually, it's a fluctuating range, like a band. And price movements within that range are normal. That line is just a reference point called the fair value, but the fair value itself is not the goal. The market price doesn't always have to be overvalued, undervalued, or follow the fair value. That's not how it works. The fair value is simply a price that lies somewhere between the undervalued and overvalued prices. TSMC, despite being a great company, received a much higher valuation due to the semiconductor boom. The top remains overvalued due to a premium, and this trend persists. At first, during this period, it was above the fair value, but around April 8th, 2025, it entered the fair value range for the first time. Even if you look at TSMC's data from the past year, it's the same. That's why at that time it was considered the best company, the one that could survive as the number one company among American companies. And now, even though the stock price has gone up, it's not in the overvalued range yet. It's currently between fair value and high value, and if it wants to move into the high value range, it needs to break through this resistance zone here. If you look here, you can see that it needs to break through this resistance zone to become overvalued. Many people are currently in the range between fair value and overvalued, and that's the pattern we're seeing. Looking at it this way will help you understand. And next, if you look at the exponential moving average chart, you can see that recently, as it rose quickly, there was a lot of buying from here. After the sharp drop, the price rebounded around the end of April. And even when it showed a midterm upward trend right now, as it is turning upward again, it is maintaining a positive initial momentum. If you look at the stock price chart, TSMC is right here, and this is where the buy signal appeared. The buy signal has emerged, currently up about 10% from the previous dollar, 175.
That's about right.
It has gone up about 10%, and I think trading is still actively happening at a good price. Next, the semiconductor industry is ARM and DAX. ARM and DAX are companies with a lot of shareholders, but in terms of industry, it's a company with such a unique position that it's hard to replace or compete with them. This company also made a lot of deals at very low prices in the past. If you look at the SMART score, it's 74, but it's not that the score is low. If you look here, among all the American companies in the top 6%, this SMART score is a number that determines whether it's an excellent company, so the higher it is, the better. So just because it's 74 doesn't mean it's low or there's a problem. In the current United States market, a company ranked in the top 6% is considered a blue chip company. Generally, being in the top 10% earns a company the blue chip label. It's a company that doesn't require industry analysis. Viewing it from this perspective reveals the reason. When evaluating stocks in the United States, both past performance and future growth potential are considered. Companies lacking growth prospects are immediately eliminated. Thorough checks on growth potential are conducted before deciding to invest. So, if you look at the scores, you can see that ARM is also ranked high among the 66 stocks. Growth potential is 80 points. Profitability is 50 points. Financial stability is 100 points. And earnings are currently very good. The improvement rate is rapid in the 35 to 65 to 80 point range, as you can see if you examine it closely. Cash flow has declined from 90 to 60 points, but they're still managing it well. That's how you should view it. If you look at the next two versions, then in cases like ARM Holdings, even if it continues to be recorded at a very high valuation, when you look at the market after 3 or 4 months, you often see a sharp drop in the stock price. When you look at it by sector, you see a lot of cases where the price drops significantly and then trades at a much lower valuation. So if you look here, the lower line is undervalued and the upper line is also undervalued, but the area between them is between undervalued and very undervalued. But in this way, it's very rare for companies with good fundamentals to stay in this range. Even in the case of Nvidia, it didn't fall this far, but ARM and DAX came down to this level and stayed undervalued for quite a while. So if you look here, there is a clear undervaluation and overvaluation range, and right now the stock price has come up and is in a reasonable valuation range. The current price is fair, neither cheap nor expensive. The reason we talk about stock prices is because, as you can see here, fair value and undervaluation can fluctuate like this. And just because the price is at a fair value now doesn't mean you have to sell. You don't need to change your position just because the price is at a fair value. In the end, whether you buy or sell depends on the supply and demand in the market. If the overall market sentiment improves, you can realize gains at that time, but you don't have to realize gains just because the price is at a fair value. That's why we keep these principles in mind. So ARM Holdings was like that in the valuation aspect. Next, if you look at it from a supply and demand perspective, when you look at the chart here and see the 5-day and 21-day EMAs crossing, that's usually a good signal. If you look at the midterm signals, you can see that the trend is currently going up, and around May 16th, the 21-day and 61-day EMAs are crossing, which is a positive midterm signal. If you look at ARM Holdings on this chart, you can clearly see the volatility. Compared to Nvidia, the volatility is much higher, so the price fluctuations are quite large. It's good to keep this in mind and approach it carefully. The semiconductor sector is moving differently, but other industries are showing a variety of movements and are trying to survive in their own ways. Now let's briefly examine the current status of major tech companies such as Microsoft, Google, and Meta. The reason is that, except for the companies that are showing tremendous growth, I wanted to show you the trends of various sectors more quickly. So Google, how is Google doing right now? When I first introduced it, the buy signal hadn't appeared yet. The buy signal itself appeared on May 9th at $154, and the current profit rate is 6%, 6.2%. When you follow this trading signal, you just follow the artificial intelligence trading as it is, so you don't have to worry about making subjective decisions. You just follow the trading signal as it is. When to buy, you buy. When to sell, you sell. When to hold, you hold. You just follow it as it is. The cumulative return is the total profit, and the highest return above means the highest profit achieved in a single trade. In other words, it shows the maximum profit made from one trade. And if you look here, all the details are listed here. The profits that came out, the losses that came out, everything is recorded here. So when you accumulate that data, it's the cumulative return. This cumulative return is actually calculated based on the real trades made by several people in the field, and there are various ways to calculate the return so that it can be shown accurately. We do not use this type of method that simply averages the returns. The SMART score is 89 points and the rating is also good.
and
Next, if you look at the qualitative aspects, recently it's been evaluated like this. So rather than the opposite of what I said earlier, it's being evaluated more positively. However, if you look at the growth, it's 45 points. Instead of the tech companies I mentioned earlier, like Daishin, which are already growing and are complete tech companies like Semiconductors, these are more general traditional industries. These are companies that are either just starting to grow or have low growth potential, such as those in the machinery or manufacturing sectors. Due to the substantial initial market size or sales volume, the growth rate is limited. Even so, it's still around 45 points. Google is one of the few companies that stands out in terms of growth. People aren't just using Google search anymore, but they're quickly adapting to artificial intelligence search like this. And among the companies that are responding best to this change, I think Google is one of them. So, won't they be able to generate good profits? Companies recently went through a competitive period, followed by a short retreat phase. Now they are gearing up for competition again and progressing forward. Growth is like this. Next is the margin, but in reality the margin is showing a pattern of gradually declining growth. In the past there was tremendous growth. Looking now, everything else is at 100 points. Because safety, uniqueness, profitability, and growth are at 25 points. It's hard to see it as a growth stock compared to Google. The reason is, if you look at the past growth rate, the sales growth was 15%, 21%, and so on. The earnings per share growth rate is 13% this year and next year, 12%, 60% after that, with 73%. Because it's growing so fast, the valuation is also about 4 to 5 times higher. This year it's 7 to 8%, next year 10%, and the year after that 14%. Although the growth is gradually increasing, expecting a rapid rise in stock price like before is realistically a bit difficult. From a comprehensive or data-driven view, it's better to consider Meta as a stable company with slightly lower anticipated earnings instead of expecting more. Meta currently still has a lot of trust from investors, and with a market cap of $598 billion, it holds about 6.5% of the S&P 500, so it's still a solid and stable company. Lastly, Microsoft. Microsoft has a buy signal at $424, and currently it's up 7.9%. So these three companies are showing similar trends. So even if the stock price drops, in the case of these companies, it doesn't fall by more than 50%. Our stocks tend to fall a lot, usually around 20% to 30%, and even when they go up, they tend to fluctuate in this way and are very volatile. In contrast, growth stocks like Tesla or Palantir can experience sharp declines of up to 50%, but also rise rapidly. That's the characteristic. So, depending on how you judge the market and which industries you focus on, or depending on your own performance, investing can be possible. And at the same time, there are cases where investing can fail. So, if you try investment methods or groups that fit your own personality, it will probably be good for you. Microsoft now has a growth rate of 40, so it's more of a value stock than a Meta, and its dividend is lower than Google's. So, If you look at large cap stocks like Amazon or Apple, they're all in the same category, but personally I prefer Google or Google.
Number 1, Microsoft.
Second place, something like this. Next, Amazon. I think these three are not much lower than Apple or here. So even if it goes down, it doesn't fall much. When it goes up, it doesn't go up as much as the growth stocks, but it's stable. So it's not an industry that shows that kind of growth, but rather when you look at industries that fall a lot, it's a big advantage that they hold up pretty well. So if you look at it as a value stock, it hasn't gone up much recently, but it's the kind of stock that gives you a sense of stability. This is the time when Hute, who came in as a value stock, first appeared. Over the past year, this industry has been consistently trading above a certain level and is now in the process of recovering to that price point once again. And the sales signal is coming back up from below. And if you look at the current stage and the trend, it's quickly turning upward from here. Even when it fell to the mid-level signal, it quickly turned upward. So if the trend improves easily and the momentum is confirmed, there is a possibility that the stock price could rise further. But rather than going back down, it's more likely that the current situation will hold at this price. And that's something we can be confident about. Daehyung Wujinjeon, let's wrap it up like this. And next, the third group is now the turnaround group. Yes, this group has turned around. Senzios, Daishi, Doa Daishi, Punsora, MVO data. Yes, I'll take a quick look at these as well. If the duration is too long, some people may not be able to watch the video well, so I'll skip through it a bit and focus mainly on the current situation and highlight only the key points. So Senzios actually had a lot of shareholders, and it was a company I introduced before, but the number of shareholders in this company has dropped significantly. Looking at the past year's data, it's almost unbelievable. Over the course of a year, it dropped from $95 to $25. That's a massive drop in a short period. But the reason I introduced this company before is because it's a good company. And its growth rate is high enough to be in the top 1% among American companies. So its stock price has risen like this. That's why I said it's such a great company. Valuation is a case where you can't really find a flaw, but CSUS did have an issue. Despite the recent surge in stock price, the company is still worth considering due to its relatively reasonable situation. So if you look at Meisu Shinho, it went up from $27 to about 40% higher now. So it was a stock that had been undervalued. And overall, it was a time when investors had abandoned it. And we sold it once at $71. We locked in profits at that point. Despite a 7% loss, Meisu Shinho's new release after 30 months allowed for effective loss management. Without proper management, the loss could have reached 50% to 60% by the reverse split day, during which Meisu Shinho was not held. So when people try to make judgments, it's really hard to do even this much. The system disregards emotions and only relies on data, so when a signal is generated, many people find it difficult to claim it's entirely accurate. Before many people invest, if you refer to how others are currently finding signals, you might be influenced by their emotions and end up following them or acting similarly. When that happens, you could also end up losing money. So right now, Meisu Shinho is doing very well and is in a good condition. Objectively, if you look at the chart like this, you can see that even though it just recently went up, the trend has already improved and is currently in a good state. Next, now for the second company, Dobeonji. Currently, Duho Daishu is still in the process of getting listed, so for now it's just being watched with interest. The reason is that the stock price keeps rising, and this company has been one of the fastest growing companies. According to the chart, Duho Daishu actually hit its lowest price in July 2024. At that time, it was the most attractive market, and after that, the stock price soared to a very high valuation. You should have bought it earlier, made adjustments, and when it reached this point, investors started taking profits. To explain, if you just waited a little longer, you could have bought it at a much better price when the market first rebounded after the downturn. But since it quickly became overvalued again, there wasn't a buying frenzy. The point is, there was no buy signal from the artificial intelligence trading indicator. A lot of people say they'll hold on to their stocks or these kinds of things until they reach their target price, but that's just what they say. When the price breaks above the exponential moving average chart and then retraces, you can use that timing and refer to these common patterns seen in good companies to make better decisions. Next, in the case of something like a fund store, there was actually one industry that no one was interested in. Taeyangwang's stock price kept falling, and it was an industry that had been neglected for a long time. In fact, over the course of a year, the stock price dropped from around $300 to $120, so it fell quite a lot. The stock price fell by around 60%, and despite temporary market improvements, it failed to recover. If you look at Maimei Shinho, there was a time when it went up once, but other than that, Maimei Shinho didn't really show up. If you look at Baekryo Eishon, you'll see that it's very expensive here. It has a lot of value, so it's a really good company and its growth rate is high. But even so, it didn't appear even once in the Maimei Shinho signal. And then from the bottom, this point went up to the right price. And if you look at this point, it went straight from the low price and stayed at the low price for a while. At that time, even though it had growth potential, it could have gone straight up. So I said that in the video. This company also appeared in the Maimei signal at around $140, and now it's up about 18%. At this point, the Maimei signal is catching it. Anyway, after catching the Maimei signal, the reason for the sharp rise in the stock price comes right after that. The actual announcement is coming up, and if it comes out better than expected, there could be another strong upward move. If the actual announcement is good and the stock is already at this level, I'm wondering if these parts will turn around again or not. Currently, from what I see, the trend is similar to mine. And the next stock is a company that was introduced recently. It's a company that was introduced as the last stock, Rover the Disc. This company is also a stock that has been mentioned a lot by investors. If you look at the stock price over the past year, the high was $144 and the low was $58. So the price has fluctuated by almost 3 times. The business has many issues, which explains its current trading price. What we need to see is whether this price already reflects all the bad news that's currently out, or if there are more negative factors to come, or if the business will get even worse, and that's why the price is like this. So, it's important to look at those parts carefully. Right now, there are a lot of negative factors in the market, and compared to that, things like growth potential aren't really standing out. From a valuation perspective, compared to the past, the current price is quite low, suggesting potential for upside given the depressed valuation. So even if new bad news comes out, it's unlikely that the stock price will drop much further. So if the stock price is already very low, even if bad news comes out, the market doesn't react much to it. Small positive news may lift stock prices, but when prices are already high, even significant good news may not have much impact. It's just a matter of maintaining that level, and on the other hand, even if bad news comes out, the price doesn't fall much. That's why in cases like Nobunob Disc, the bad news is already fully reflected in the price. Recently, people say that Eli Lilly's valuation is better or that the competitors are making copycat drugs, so it's not good. These things are already well known, and these parts of the stock price already make up about 1/3 of the price, so I think all of that is already reflected. So from now on, when you evaluate Nobunob Disc, I think it will be more important to focus on whether any new negative factors emerge. The order book shows orders at $125, but no one has been buying at that price for Nobunob Disc, so it's not yet appearing in the artificial intelligence trading order book. I introduced the corner on the video of my own accord, not because I was instructed to or asked to advertise it. When it comes to semiconductors and batteries, there are actually a lot of companies that are directly related to semiconductors among the companies that are listed. So if you look at the actual performance, it seems pretty good right now. That's just what I introduced. The ideas of recommending something every single day are not correct. Your price isn't falling due to the current supply and demand situation, with buying orders waiting below the current price and sell orders above it, indicating an unfavorable supply and demand balance. Recently, the 5-day line crossed the 60-day line for the first time. In the short term, it hasn't crossed above the 21-day or 61-day lines, but the 5-day line is about 70 days below the lowest 61-day line. The current stock price is about 68 days based on the recent peak. As Novo Nordisk's supply and demand situation gradually recovers, the stock could rebound strongly after dropping to around $70. However, we need to wait and see if the supply and demand changes truly take hold. In Amari's case, I wouldn't recommend buying it for the first time, even if it's on the buy recommendation list. Right now, Novo Nordisk is in that kind of situation. Recently, Datadog gave a buy signal at $105. And since the current stock price is around $110, it's up about 10%. This is what is called a turnaround industry. The business is recovering, and that's why, looking at the current stock price, it's still quite undervalued. In this situation, Datadog continues to show positive momentum. From a qualitative perspective, the fundamentals are improving. So currently, you could say it's a value stock. It's the last D group. Seongjanju is a printer, creator, technology service down the trade desk. These industries have actually been stable or even declining, and they're not easy sectors to turn around. But if the stock price drops a lot, I wondered if they could survive, so I introduced them.
Up to that price.
Because it didn't come down to that price, I didn't buy it, but if you look at the chart, you can see that Jeonsu's industry went up quite a bit. If you look at it in reality, the growth rate is very high, and the financial stability and profitability have also improved significantly, so I saw it as a good stock. If you look at the valuation, Palantir used to be undervalued in the past, then it went up to a high valuation and the stock price kept rising. Then the stock price fell and stayed low for a while, and now if the actual performance is good at this point, the stock price could rise again. That's why in the previous earnings season, I introduced it as a stock that could have a good opportunity in the next 4 months, but it didn't come down to the price I wanted. I'll come back again. So Nvidia is also a case like that, and the stock market is basically a place where things go from undervalued to overvalued, and if you invest according to each phase, that's how it works. In the previous system, we couldn't hold on to Palantir, we couldn't keep it, and we just introduced it as a good company. Currently, in terms of the system, it's now coming out as a watch list. Still, in cases like technology, there are stocks that are also listed on the United States portfolio, so you can keep an eye on them with interest. And next, this industry is also, as expected, a leader, Wega.
A remarkable growth stock.
It's a unique industry, but as you can see here, the growth stock stands out. So these kinds of industries are the types of good businesses that investors look for when searching for future growth stocks. So if you look at the list, the scores go from 34 to 55, and especially the growth potential rises dramatically. These industries have a very high possibility of a sharp upward trend. So it seems good to look for these kinds of types. So when it comes to valuation, even when you look at it as a trade, right now it's too overvalued, so that's the current situation. In the process, there were some stocks that kept going up and down, and besides that, everything was traded at the top. Then the prices dropped and adjusted, and then there was a period of stagnation. But if you didn't buy then, now they're going up again. These kinds of patterns are happening. So in cases like technology stocks, the volatility is quite high. The list shows sales growth rates of 120%, 60%, 23%, and a 200% increase in operating profit. These patterns indicate significant fluctuations in stock prices. So when adjustments happen, the stock price can change very quickly, and when it rises, it can also go up very quickly. So if you keep that in mind and refer to the market at every moment, I think it will be helpful. So from my perspective,
right now, Shinho,
I couldn't catch it. And then Seo Bisuda, I think of this industry as a personal and unstable business. With a smart score of 83 and a growth score of 75, the company performed well, keeping pace with competitors like Crino Technology. As a value investment, the stock is currently high priced, but there were times in the past when it was undervalued. At that time, when it was adjusted, the actual sales signal was triggered, so if you had followed that signal, you would have sold. Now, the current signal is a holding signal. A buy signal appeared at $970, and now it's around $1,023, with another signal expected soon. Even in corrections, it's maintaining a good upward trend and showing strong growth. At this level, it's a good chart. ServiceNow is currently being held in the portfolio. Next, let's talk about Majimok Trade Desk. Namaji is a bit different, but still, in the case of Trade Desk, it was one of the companies that benefited a lot from the market's recovery. However, in the case of companies like this, buying recommendations have recently come out. It seems like Jeonjo is currently filming a broadcast. Jeonjo is here. Even with a smart score, growth is slightly weaker than last year, which is somewhat disappointing. So if you look here, the overall score has dropped because the growth aspect has slowed down. That's why it's important to see if this growth can continue in the future. But if you look here, that's the reason. If you look at the sales growth rate, it's not that low. 16, 18, 18%. If you look here, the earnings per share growth rate is 6 to 9%. So compared to last year, it's not that low. The reason for this part is that the growth rate has slowed down a bit. If you look at the next year, it's 34%, 35%. So that growth rate is expected to recover again. So in terms of growth rate, that's right. And that's why this figure could recover to over 40 points and potentially even up to 60 or 70 points. And when you look at it in terms of valuation, the fact that the price hasn't dropped that much means that the trade risk is reflected in the high valuation. I paid back the loan to Samdol in December 2024 and then I paid it off well after that, even with the interest adjustment. In reality, the price only fell by about 22% at its lowest, and after that it dropped by only about 20% more, not reaching the level at which it was expected to plummet. So that's why a lot of people wanted to get out as soon as possible. So when it drops all the way down to the very bottom, it's usually a very rare case. So the stock itself went down to a very low range, then the price rebounded a bit, and then recently when it actually came back up again.
Let me explain it once.
This is the current situation. But still, it's an industry that's heavily influenced by the state of the stock market. In terms of valuation, it is still undervalued. Based on supply and demand, the stock appears to be beginning a new rise following a consolidation period. From a mid to long-term view, it's poised to start a fresh uptrend. The stock is attempting to break through the 21-day and 61-day moving averages after consolidating for 77 days, suggesting a potential breakout in the near future without any time-related constraints. When earnings per share rises like this, the stock price can also potentially increase accordingly in this industry. So if you look at Meisu Shinho, you can see the recent trend here, and from this you can get a sense of the current buying and selling signals. Overall, now I have reviewed the sectors like this. Many of you are watching this screen, but if you look at the entire group, you can see that most of them are maintaining their positions. And Group A is showing a situation where they are actively responding, buying and selling quickly. On the other hand, Group B has both low trading volume and low upward momentum showing this kind of trend. So if you think about which type of investor you are and make your decisions based on that, it will be helpful. Turnaround companies are those that are overcoming the market's difficulties.
If you look at it broadly,
when Shinho sales come out, you can see that it's a group that doesn't have much burden in terms of valuation. In the case of Seongjangju, there are a lot of franchises and credits, so it's not that the stock price is falling just because it's overvalued. If it actually follows through and goes up, it can continue to rise from there. So if it fits your style and you do it, it will be good for many people.
that's right, service.
When the download or trade desk comes out, the buyer's intention appears, and now every signal is with me. If you download this app, you can search for all these things. There's also an Android version and an iPhone version. If premium members set their watch list, whenever a trading signal comes out, you can receive alerts and reviews about the stocks on your watch list in real time. This tool is great when used as intended. Future updates will include notifications by category. With a growing user base and active trading community, it's poised to become even better as more people adopt it. With this, the corner for Donghyuk's stock picks will be wrapped up here. In the next video, I will explain one by one about blue chip stocks, large cap stocks, mid cap stocks, and small and mid cap stocks, focusing on industries and companies that are expected to grow in the future based on data. For those of you who are interested, I will start again at the point where blue chip stocks are actively fluctuating so that I can bring you good content and helpful information. Thank you for watching, and I appreciate it